Gold demand in the first quarter of 2013 fell 13%. That's if you exclude OTC investment. If you include OTC investment, then gold demand was flat at about the same level as it was in 2012. Gold demand in India in Q1 was up overall 27% at over 256 tonnes. And within that, you saw very strong growth in investment demand, that was up 52%, and very strong growth in jewellery, albeit less than investment at about 15% in the first quarter of 2013. So overall, a very strong quarter for Indian demand. India remains the largest gold market in the world, and I think looking forward, as personal incomes continue to rise in India, you're going to see more and more demand coming from that market. In the first quarter, Chinese demand rose 20% in total compared with 2012. If you look at it by breaking the categories down, jewellery rose by 19% and investment rose by 22%, a strong performance for the Chinese market. Overall, we think investment demand is strong in China, also as an inflation hedge and a store of value, and that's the main reason Chinese consumers are buying gold in bars and coins. Looking forward, we believe demand will remain very strong in China as incomes continue to grow, albeit at a lower rate than in the past, and whilst economic growth continues to be positive in China for years to come. A complex picture is emerging for gold demand in the United States. Overall, ETF demand fell by 177 tonnes, 3/4 of which was in the US, on the back of a stronger US economy and some switching into other asset classes. However, taking a look at bars and coins, we had a rise of over 40%, and also in jewellery, we had an increase of 6%, the first rise in quarterly jewellery demand since the third quarter of 2005. Central bank demand for gold was strong. The buyers of gold are the central banks of emerging countries. In this quarter, you saw buying by the Russian Central Bank, the South Korean Central Bank, and also some of the Central Asian republics. The reasons for them buying gold remain the same as they were last year. You're seeing diversification away from the dollar and the euro, and also from sovereign debt, as it's no longer seen as a risk-free asset class. As far as supply is concerned, mine production rose by 4%. However, in response to the softer price, recycling fell by 4%, and overall gold supply was flat. Whilst we have been discussing the first quarter gold demand trends, a great deal has occurred in the gold market during April. We saw a large futures trade on the COMEX exchange push the gold price down, but since then we've seen very strong demand. In China, in India, in the Middle East, we've seen high premiums for gold and strong demand for jewellery and investment products. We've seen shortages in some countries and also some refineries announcing waiting lists for products up to 2 weeks in some cases. We've also seen demand for minted coins increase in Western markets. So overall, diverse gold demand across both sectors and geography remains strong and is likely to stay strong in the future.